I'm Charlotte McLeod, and you're about to watch part 2 of my interview with Lobo Tiggre, founder and CEO of IndependentSpeculator.com. Before we get started, just a reminder that if you enjoy this video, make sure you hit the like button and subscribe to our channel. It's always informative to speak with Lobo, and in part 2 of this conversation, he covers his thoughts on a number of key events in the uranium market. We hope you enjoy. I think we're going to shift from gold to uranium right now, which is a topic that's always of interest to our audience. There are a few interesting things that are going on in the market this year, and we haven't had a chance to talk about what's happening, I don't think. So one of the things I wanted to bring up is we're getting a lot of buzz about companies going into the spot market and buying physical uranium. So in your mind, how significant is that, and what are the implications there for supply?
It's interesting that you start with that. I thought you were going to talk about the nuclear incident in China. That seems to be on everybody's minds today. But yeah, my feelings are mixed on that, Charlotte. I wish it had had a bigger impact than it did. Like the big hope, I think, when that started was that they'll soak up all of the easy uranium out there, the guys who have it and they really want to get rid of it and they're willing to sell it at low prices. If we could get rid of all that cheap uranium, secondary supply floating around in the market, soak all that up, and then you would have much more real negotiation between buyers and sellers, setting more realistic prices, and that could really unleash the spot price. And I have to say that hasn't really happened. There's been a substantial offtake, and spot uranium hasn't gone vertical. It's actually doing quite well. We're having a very good month. We're in the mid 32s right now as you and I speak. Gold is down sharply today, not a big meltdown, but it's a sharp retreat. Uranium has a nice little uptick today. So my uranium bug friends and I on Twitter were joking, okay, which one is the other yellow metal this time? So anyway, uranium is having a good month. Uranium is actually having a good year. So I wouldn't say that buying, unexpected source of buying had no effect. It certainly didn't hurt. But it wasn't a silver bullet, right? It didn't suddenly take all that cheap uranium off the market and woohoo, it's off to the races. So I'm always a little bit cautious when people make these grand predictions. Oh, this is going to change everything. Well, markets are tricky and hard to predict. And Mr. Market is not one person. He can't make up his mind and do one thing. Markets are millions of people buying and selling for their own reasons. So this was a factor, Charlotte, but I don't see it as the huge game changer that a lot of people thought it would be. I think the best thing I can say about it actually is, since I am a uranium bull, I do think prices are going higher. I think it was a smart move on the part of the companies that did that. I think they will make money doing that. I think it will provide them with a capital gain and a source of liquidity. If I was, I saw a lot of pushback on that. Like, you're a miner, why are you buying uranium? You should be mining it. But I think that's actually a very short-sighted criticism. They're in the uranium business. And if they are not bullish on uranium, why, they should be selling their uranium mines. If they don't think the uranium price is going up, then they shouldn't be telling shareholders, oh, just hold on a little bit longer. We're going to start this mine when the uranium price goes up. So they have to believe the uranium price is going up. And if they do believe that, why shouldn't they buy it when it's cheaper? Why should they deplete their reserves or resources in the ground when they can get the stuff on the market now cheaper than it would cost them to mine it? That, to my mind, it's sensible. It's bargain shopping while bargains are available.
Right. And, the lack of major reaction there is partially why I asked the question, because I know it's a little bit of old news at this point. But yeah, definitely interesting to get your thoughts. And of course, one of the other things, we'll get to the China accident later on, or the news around that. But one of the other things that came up earlier this year in the uranium sector is the Sprott Physical Uranium Trust that's going to be coming to market. So I wanted to get your thoughts on that as well, because there was also some excitement around that. What do you think that's going to bring to the space?
We're going to get hate mail, Charlotte, but I just don't see that as a game changer either. Now, don't get me wrong. I think it's great. I think it's a good deal. If I was a shareholder, I would vote in favor of it. And I think that the Sprott organization will, not to throw UPC under the bus or anything like that. I'm not saying they're incompetent or anything like that, but I think the Sprott organization, let's just say, brings economies of scale to management of the service. That would be beneficial. And they're planning to restructure it as a trust, which gives them a US tax efficiency, which sounds like a very fancy, and, like, what do I care about a shareholder? Well, it's good to have a uranium proxy that has lower overhead costs and so on, but it also gives you access to a bigger pool of investors. So here's the thing. A lot of people are saying, oh, Sprott's going to go out and buy all the uranium, just like, Sprott Silver is buying all the silver from the silver squeeze, right? So Sprott physical uranium is going to buy all the uranium and push the uranium price up. That may or may not happen in the same way as the previous thing we were talking about. Now, if this new Sprott way of structuring this does bring in major new institutions, and there's a huge inflow of capital into the new Sprott physical uranium trust, and they need then to get more uranium to balance this, right? I guess at some point they could have a higher multiple, but at some point they need to back it with physical uranium. So yes, enough institutional new buying into the uranium space could make a bigger buyer out of Sprott. But we don't know how much that's going to be, if it's going to be, when it's going to be. So I'm not raining on the parade, or maybe I am a little bit, but I'm not saying it's not important. I'm just saying, don't expect anything big fireworks the next day after the deal closes or when it starts trading. This will take a while to work through. And it should have a beneficial effect, but it could take months, maybe even years to trickle through to really have an effect where it changes materially how much uranium Sprott would be taking off the market.
Okay, so we've got those two events that people were certainly very excited about, and we've brought them a little bit more down to earth. I think right now the question
professional
for you
Eeyore here is what I am today, but yes.
No, but fair enough. And I think the question for you then is, what trends are driving the uranium market so far this year? This could be a chance to talk about that incident in China that you were bringing
Sure.
up,
Well, so I can be
or
more
whichever
positive
else.
there. I can be more positive because I really think the incident in China is greatly overblown. Now, I have to say, right, I've heard reports that one of the Chinese experts called in to investigate suddenly had a accident, fell off a building or something. I don't know if this is true. It's just something I saw on Twitter, but it just came before we spoke. This came across my desk, completely unverified. But I understand being suspicious of China. I understand being suspicious of any official reports. And if the Chinese say oh no, it's okay, it's no problem. Well, when are they going to tell us it's not okay, that it is a problem? How long did they take for them to tell us that the now no longer Wuhan virus, now we have 27 other names for it. How long before they admitted that really was a problem? So I understand reasons for being suspicious, but when it comes to nuclear accidents, this isn't something that any country can really hide. I mean, think about Chernobyl. The Soviets didn't tell anybody. It was people measuring radiation in Sweden or Finland or something that noticed the blip up. You can't hide these things. If there's a serious incident, we would know it, or we would know it very soon. And again, not that I really trust the United States government as being the most honest organization in the world either. But I don't think the United States government has a high incentive to cover up for China, certainly not under current circumstances. So the US government has said it's not a major incident. And it does look like the original whistleblower, they weren't even saying it's a major incident. There's no evidence here really that this is a major incident. So here's me being Mr. Sunshine, okay? I'm not raining on the parade. I'm saying that I think that scare is much overdone. I think the fact that it did knock uranium a little bit and uranium stocks quite a bit down, I think that was a buying opportunity. To the degree that there is any lingering shadow on that, I do think that people looking to buy into this space, that's a gift for them. That's an opportunity. So there's my Mr. Sunshine view. Because bottom line, as we were saying at the beginning of this segment, uranium is having a good year. Uranium is having a good month. The problem has been, I'm sure you've talked to Rick and Rick Rule and some of the others who are saying that, the problem is that the stocks have gotten ahead of uranium prices. Uranium prices still are way below where they need to be for these guys to make money. And the stocks are up, 1, 2, 300%, right? It's hard to buy when the stocks are up and the commodity isn't much. So when you see the stocks correct, and actually the commodity is up, but the stocks have now come down more, well, that addresses that imbalance, and that's a source of opportunity. So one of the 3 stocks that I bid on today, Charlotte, was a uranium stock.
All right. And okay, this might be another element of uranium for you to debunk. We'll see. But you mentioned, we always hear about this incentive price for new production to come online for uranium. Often we hear that it's $50 a pound. Is that still the level that we would be wanting to see for that to happen, or has it changed?
Well, actually, it's been around 60 for a while. If you throw cost of capital in, which you should, if you're going to build a mine, it costs you something to get capital. And it's something that really confuses people, because you'll see a study and it says cash cost, $20 a pound. Well, heck, why don't they turn that sucker on, right? It's 32. They may told us, well, you got to build it, you got to pay for building it, you got to get your money back, and so on. So cost of capital is important. And by the way, your cash cost, of course, is not your all-in cost. So the incentive cost, I think, for some time has been north of 60. You look at a lot of the studies that are coming out, and there are few of them that will use 50. Most of them will use 60, 65, 70. So I think that 50 number, if I see a 50 in a study, I'm excited. Like, wow, these guys are using a much more conservative number. I like that. But they still are. And you look at some of these that they'll have, there are a few projects out there that have all-in sustaining costs in their studies that are less than the current spot uranium price. And you'd sit there and say, well, gee, why don't they turn that puppy on? They could make money now, today. Well, all-in sustaining cost isn't really all in after all. And you do have cost of capital. And you look at the study, even with an all-in sustaining cost of 30 or whatever it is, 35, some of them, that makes no sense to build a mine to make a few pennies per pound if you could squeak by, when if you wait a year, you can make dollars per pound. So I guess what I'm saying is I think the incentive cost, what's important about it is that it says that uranium prices still have to go much higher. They really need to double from where they are today, Charlotte, to see a major rush. For high prices to be the cure for high prices, the uranium prices need to double and stay there for a long time. And this is true even with, Russians starting to talk about bringing a new uranium supply and Cameco restarting and so on. Yes, some new supply will come on at lower prices, but not enough to meet demand, not global demand, Charlotte.
Right. And knowing that you're adverse to making price predictions and things like that, that doubling level, you do still believe that it will happen. I know that you're optimistic on the outlook for uranium. So maybe we just wrap up how you're feeling about the market at this moment.
Sure. Well, yeah, I'm more willing to talk specific prices in the future about uranium than I am of gold. It's much more of an industrial question. It has much less of the politics and the implications for the powers that be. So I will go so far as to say, I think that we will see uranium spike to who knows what. I mean, it went to 140 last time. Just adjust that for inflation, it could go much higher. So no, we didn't have really Kazatomprom though last time. And so I'm not sure it'll spike as high, but I do think we'll see it blow way past the incentive price. That's just the way commodities markets work. They always overreact. They get oversold, they get overbought. I think we're going to see, I don't know, but much higher than the incentive price. Could it go over 100? Yes, I think so. Could it blow away the previous all-time high? Yes, I think so. Will it stay there? No, I don't think so. But I think after it comes back down to earth, I think we will see it stabilize near that incentive price or better, because less than that, there just won't be enough uranium. So that's I won't give you a date for that, Charlotte, but I think we see a sustained, many years plateau or just higher level of uranium prices in the plus $60 range or higher. And, the better companies right now make can make tons of money at that level.
All right, and as we put everything together for today, we have two markets, two commodities we've discussed that you're feeling bullish on for the future. They're not the only commodities that have been doing well this year, and we've started to hear talk about this commodities supercycle, although recently maybe people have gotten a little pulled back from that idea. So where do you stand on that idea, the overall commodities sector moving forward?
Sure. Well, I think it's very important to, it's kind of painful, but I think it's important to reach outside the echo chamber. If you talk to your fellow gold bugs, if you're like me, a gold bug or silver bug, or your fellow metals and mining enthusiasts, most of us are like way gung-ho, mining supercycle, commodities supercycle, metals are going to the moon, electric cars are going to drive demand for copper and nickel and everything. Yay, woohoo, party time. But that's not the way most of the financial world looks at it. And okay, maybe most of the financial world is wrong. We're right and they're wrong. But they're the ones with most of the money. They're the ones investing in Volkswagen and Tesla and these companies that are going to buy these metals that we want to mine or see mined and so on. So we need to look at what's going on outside of our own little part of the market. And there is a story now that I'm seeing more and more in the mainstream press that, nickel and copper and some of these metals went vertical. That's not sustainable. They're going to come off. There is a narrative going around now that I see is actually building steam in the mainstream that either the commodity supercycle isn't, like it was just a blip, or that it's happened and now it's over, right? It's done. Copper hit a new all-time high, so now it's going to be downhill from here. And honestly, if you look at, for example, copper, which I am very bullish on, but you look at its previous peaks and they're very vertical and it comes back pretty sharp from those peaks. So it's not unreasonable for somebody to say, well, look at that. That was a new all-time high. It went vertical. It has to come down and it's going to go down like it did before. But I'm a fundamentalist, really, more than a chartist. And the reasons for copper to be higher are just getting started. There really is no reason to look at the demand coming down the pike, the supply issues, even with some of these new mega mines, the supply constraints in that market are not going away. And demand is not going away. I see copper as a multi-decade trade, Charlotte. And so, yes, we can have some correction in the near term, but I don't think the commodity supercycle is over at all. And I think if you look at all of them, my view is very Austrian, libertarian. Money printing is good for commodities. You can't unprint all that money. Yes, velocity of money can go up and down, but you don't unprint it. And I think that the fiscal and monetary policy, not just in the US, but around the world, is extremely bullish for anything real. And that certainly includes commodities. And I think it's bullish for years to come.
All right. And finally, before we let you go, if you could let everybody know where to find you if they want to learn more.
No, thank you. I always enjoy that question. I don't know if anybody's left listening when you throw that softball, but so yes, it's independentspeculator.com. If you're still watching, I'm not going to give you a buy one, get one free or anything ridiculous like that. I do have a free service. And my simple promise is if you sign up, I will not spam you with a flood of advertisements every day and hype and stuff. I'll try my best to provide useful information to you.
All right. Well, I do hope that people listen to the end. I like to think that they do. Thank you for being here today to talk with me and hope to have you back soon.
Thank you, Charlotte.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Lobo Tiggre of independentspeculator.com. Thanks for watching part 2 of my interview with Lobo Tiggre of independentspeculator.com. If you'd like to see part 1, which covers the gold market, you can find the link below.